Hi, good afternoon, everyone. So today we are going to talk about the reasons for business failure. One of the most important topic. So far, we know about the all forms of business organization, how they create, and how they what are the main advantages and disadvantages. Main the methods of business startups and everything, the reasons, advantages, and disadvantages. So today we are going to introduce you why business mainly fail, and you talk about the what are the measures of judging success also. But every business organization they cannot actually operate successfully. Sometimes there are some points are there. There are some reasons why business fail. Okay. So before we start the lesson, let's look at the roundup of the lesson today. We are going to talk about today. We are talking about the main few reasons why business is going to fail. We are mainly talking about the summarize this lesson as a cash flow problems and the lack of financial problems and not competitive and failure to adapt changes in the market and everything. So you can see recently 170-80-year-old company called Thomas Cook Business has failed recently. They collapsed. As recently they actually bought from a Chinese company called Fosun. Well, look at this why Thomas Cook failed. A short video clip about Thomas Cook and everything. Let's look at that video clip first, and after that we'll move on to the lesson, our normal discussion. The Thomas Cook. Look at this video.
Founded by a Baptist missionary, falls so far from its prudent but pioneering foundations. In 2007, the revenue of the UK arm of the holiday firm was over £3 billion a year. But it's been traced back to the fatal mistake of embarking on a spending spree, merging with various companies including Hotels for You, the Co-op, and the struggling rival My Travel.
In the move to digital, Thomas Cook, like other companies at the was just going around hoovering up anybody it could see, and the sum of the parts was, frankly, quite often. The trouble with starting an acquisition spree was the world went to hell in 2009, 2010, 2011. So buying lots of travel agencies when the world is in the middle of a global recession and people are losing their jobs is a very poor idea. So timing could not have been worse. And this led to almost the collapse of Thomas Cook in 2011.
They fly holidaymakers, places like Spain, Italy, Greece. Now Thomas Cook has a debt crisis of its very own. The tour operator's share price plunged this morning when it told the markets it needs yet another £100 million loan.
Despite their troubles back in 2011, the acting CEO of Thomas Cook was defiant. You built up way too much debt, haven't you?
But that is, of course, what we are trying to address now by divesting and also making sure that we are running our business in a more profitable way. And we have stopped acquisition, of course.
If you went bust, can you guarantee that holidaymakers who have booked a package holiday with you would get every penny of their money back?
We will not go bust.
Increased debt since 2007 and allegations of mismanagement are said to be some of the factors that led to the company's eventual demise. In the aftermath, many are asking, could the company have done more to ensure Brits didn't just book it, than Thomas Cook did? Why exactly did we stop Thomas cooking it? And how is it that this iconic brand was allowed to become what some people have called an analog company in a digital world?
This was about a radical overhaul of a travel industry where the consumer had developed in the digital age so much power, so much authority that they could book their own travel anywhere they want, fingertips, on their phone. The information was there, the expertise was there. So Thomas Cook had to justify its existence. And to me, it never did.
Under pressure from the online travel sites, low-cost airlines, and new companies like Airbnb, Thomas Cook focused on their heritage and massively expanded their high street presence.
The bad bet was high street stores, very expensive, at a time when we all go shopping on the internet. So that was the failure of Thomas Cook's strategy, to gain significantly more high street locations through Co-op and My Travel and others at a time when, the world was going to the web.
So it breaks your heart to think that this business couldn't actually use its own values, its own creation, its own innovation to get through this digital age. It could have happened. It needed investment. It needed passion. It needed customers that didn't just want to trade with it because of the price. They wanted to trade with it because they wanted a Thomas Cook holiday. And unfortunately, that went away a long time ago.
Okay, guys, now you right. So just now, actually, you just watch what has happened to the Thomas Cook situation. The 178 all years company Thomas Cook has failed, and the 178 years old company. You can see they had airlines, they had hotels, and they had everything. But normally, as a result of, you can see now in digital world, they still use analog methods. The main reason for business failure is not updating, not using the technology fully efficiently in the full capacity. They still mainly focus on the high street shops where the people still wanted to come there, visit there, and they didn't want to make their bookings and everything. And over the phone bookings and everything, may relying on while other people actually searching on destination and everything from internet. So you can see there's one typical example why one big reasons not up to dating, not adapting to the system is a main reason for business failure. Not only that, there are so many examples like that. You can see mainly a major influence. You can see the organizations. A main reason why we're thinking about nowadays actually a business organization failure is not adapting to the technology and everything. Not only the technology, guys. You can see when you talk about the some business organization, they are well equipped with the technology, but sometimes they don't have proper strategy. They don't have proper knowledge to do the business. Sometimes you can see a lack of the efficiency. Sometimes market not good enough. Sometimes you can see these days that like this kind of a pandemic situation, any organization cannot perform very well because of the current situation in the world is not good for the business organization, especially the airlines and especially the tourism, hotel and all other industries. This will be may have huge impact. Other main typical classical examples reason for business failure, you can see the financial problem, the cash flow, the running out of cash and everything. We'll look at that thing, the cash flow problems and the cash lack of finance problems and other things also we look at that. So we can see the different examples are there in the world. Large number of people, organizations are starting every day, but same as about 90%, 80% of the business actually fail within 5 years. We'll find out why this business actually fail and everything. How to define a business failure, and you can see a business failure is something. Is actually a precise rate of business failure across the world is difficult to identify that much. In getting started, we call about 58% of the new business startup in 2009 in UK had failed, right? 50, how much? 58% is actually good, but normally more than that. You can see every year, normally we say 2015, the USA Census Bureau reported that 400,000 new business were set up in the USA during that time in 2015, but out of that, how much? 470,000 business failed. One thing is certain from these statistics, the failure rate is very high, right? You find out what are the main reasons for business failure and everything. Under that, prominent one is the cash flow problems. Why cash flow problems are creating cash flow problems these days? Also, everyone common for everyone. A lot of people actually organizations actually running out of cash. You can see organization like over trading situation. Sometimes this words are really important. Familiar with this word over trading. Over trading means something you actually utilizing something. You try to increase your capacity, but actually it's not your potential somehow. So you don't have that much of demand, but you try to go for that. So that kind of thing, over trading, higher use of your capacity and everything. As a result, what happened? The organizations, everything will be running out. So you can see these organizations, young and rapidly growing businesses are that particularly a risk of over trading. So basically, over trading, you can see a lot of organizations right now are having some problem with the over trading. So spending more money on resources. That's the thing we can find out. Spending more money on resources to meet the rising number of orders. Established companies trying to expand too quickly can also face this problem, right? So overtrading means the rising number of orders. As a result of that, you try to increase the number of resources, but sometimes stockpiling and everything, it cannot be worked out. And investing too much in fixed assets. You can see some organizations, they have invested too much in fixed assets. processing, manufacturing, too much of fixed asset and machines you need, right? And as a result of that, what it will be important for that organization to actually invest too much in fixed asset. But in case sometime happen, there's no demand or something, if they cannot meet the orders, large numbers of capital initially invested, those machines and equipment will become no use. As a result of that, it may be better to lease some of these assets than buying that from cash. You have to reserves and everything are really important. These fixed asset and everything to protect the cash reserves. Other one is allowing too much credit. Allowing too much of credit, having too much of credit customers also you can see now another reasons. Allowing too much of credit for some people is not good because then you are always ended up with the cash flow problems in title number everything because you're also having some schedules and you're giving some kind of a credit facilities to one of your customers. As a result of this, what happened, too much of credit facilities, the customers cannot pay on time. As a result, your organization has to fail because the credit facilities must be there, but should be a tolerance level must be there. You must give some kind of short period, but not like 6 months, 5 months like that. So it will be like 2 weeks, 3 weeks is okay, but some more than that you have to convey. You're mainly concerned about the cash flow. The stability of the cash flow is really, really important. Overborrowing is another problem. Sometimes you have too much of loans to pay. As a result, you are running out of cash easily. As a result, sometimes perhaps you have to sell the assets and sometimes you can sell shares and everything. Overborrowing situations are there because you want to go like high speed. Then what happened? Overborrowing. You're taken out loans, which interest cost is really unbearable. As a result of that, to avoid the overborrowing, business may try to actually push their more equity capital part, right? And seasonal factors, there are off seasons and seasons for some organizations. As a result of that, seasonal factors sometimes affecting you. In the off season, you don't have any sales. You can see now for some industries like this is off season for so much of industries, but this time you can see like a Christmas season coming. For a lot of organizations, it's a good shopping season to earn good income because of a shopping and festivals and everything coming up. But do you think can they get an opportunity now? No, you can't. They can't because of the COVID-19 and everything. Everything pandemic is going on. There is no season. So you can see festivals, public gatherings, and entertainment events, everything might happen, and even the religious activities has to be cancelled as a result of that. So these seasonal factors are really important. You need careful management, although it's possible to predict these changes. Unexpected expenditure sometimes are made. For example, there can be a theft, burglary, fire, machine breakdown, accidents, everything can be happen. So you have to meet this unexpected expenditure in future because business need to prepare for this unforeseen expenditure. And mainly last one against the external factors such as COVID-19, and then you can see other the global world recession, something world war or something like that. External factors also affected the business failure. As a result of that, they don't have any control over these factors. If government says so, government say to shut down the business, shut down the area, isolate the area, so you have to wind up your business organization. You can't have any opening. You can't open your hotel. You can't open your factory. You have to close everything because you have to listen to the government. You have to listen to the police. You have to listen to the law. So external factors always beyond you. So if something happens from the outside, you are always has to responding towards that thing positively without facing those challenges. For poor financial management, sometimes organization financial managers are not professional enough to actually control things. So poor financial management can be another reason for those things. Okay, now let's move on to some kind of like a real world example happen, like Thomas Cook is one example, and you can see there are famous examples are there, something like Kodak and everything. You can see these are the top 10 business failures that has happened in recent parts. You can see.
They failed to focus on software and kept focusing on hardware because their leadership feared they would lose customers if they changed too much. But it was actually the failure to change enough that ultimately led to their demise.
Nokia.
When they finally launched a smartphone behind the iPhone, the Nokia operating system was a mess, and the bad user experience took them off the board as an industry leader. BlackBerry made a similar series of errors from their game-changing arched keyboard. They failed to shift the market toward bigger touchscreens. BlackBerry was more concerned about protecting what it already had than innovating with what the market wanted. The current CEO, John Chen, announced in 2017 that under their new strategy, they would focus on software development, including security and applications.
They're outsourcing hardware to partners, but that seems too little too late, as they've faded into irrelevancy. I guess we'll have to wait and see what they come up with. Number 2. Blockbuster didn't listen to...
Okay, now look at the first video. You can see here the BlackBerry phones and everything. This why this company failed. The Nokia and BlackBerry, the both companies actually not successful because the Nokia, especially their system, the Android version and everything was failure. As a result of that, their technology was a little bit outdated. When they compared with the Samsung and iPhones, you can see it was very behind. This one business failure happened not because of the financial problem, because they are not adapting to the changes and everything. Even the BlackBerry also same. You can see this called their keyboard system. Their innovative system is a quarter key keyboard. But that time, the other organizations like Samsung and all other companies, they make the touch phones and everything, right? So organization, they mainly focus on this Schottky keyboard type, the old-fashioned phone. So that's a result. No one actually want BlackBerry right now because it's old-fashioned. Because now the world's trending is a touch phone, the touch panels and everything. But now this one is out of date. No one buys actual BlackBerry. Okay, look at the other one, the BlackBerry and everything, the Blockbuster. The Blockbuster situation is actually is happened in the movie and everything because now the Netflix and everything, now no one actually, the video rental organizations are not surviving because it's another
In
reason.
2004, Blockbuster had successfully transitioned from VHS to DVD, and it was at an all-time peak. But only a few years into operation, Netflix was already offering shipped DVD rentals. Blockbuster declined an offer to partner with Netflix in 2000. Blockbuster's CEO John Antioco saw Netflix as only serving a niche market and not a mainstream business like Blockbuster. The addition of Netflix's streaming service was the final nail in the coffin, and by 2010, Blockbuster had filed for bankruptcy and continued losing brick-and-mortar stores. On the flip side, Netflix is valued at over $28 billion and is growing internationally. Number 3. Segway.
Okay, so you can see the Blockbuster thing. That also another research reason is they are also not adapting to the system because the online streaming video has came like Netflix and everything, Amazon Stick and everything. But the Blockbuster was video rental like a DVD versions because nowadays actually there's a drop in the demand for that because no one watching DVD right now, right? So because of this difficult, sometimes expensive, we have to visit to the shops and everything. And nowadays the online streaming videos are really fast and you can download it easily, very comfortable. Because of that, you can see the Blockbuster thing was in 2010. They filed bankruptcy because of that. And now you can see the Netflix was that time worth 29 billion US dollar valuation is there and growing right now. Okay, the third situation you can see.
Never defined how to use their $5,000 product. Who would have thought that a space-age looking motorized form of transport would have ended up only being used by a few mall cops and tour groups because it lacked a clear identity? In 2001, when the Segway entered the market, it offered something brand new. It had all the opportunity to revolutionize transportation and it was fuel efficient. Despite the cost of $5,000, there was a lot of hype around it, which made people pretty interested. But Segway failed to define exactly what its motorized scooters were for. The police didn't know how to handle them. Were they for sidewalks or for roads? Was it safe enough for street handling? And lastly, Segway users were called out constantly for being lazy as they whizzed by pedestrians. It became clear consumers weren't willing to fork out $5,000 for a scooter you weren't allowed to use or were insulted for riding.
Right, you can see guys, that the main reason for this business failure was finding out that mainly this organization was really, outdated. You can see that the previous case, it was mentioned that this organizations was really, not adapting to the new technology, not adapting to the new world and everything. As a result of that, their business failed. So as a result of that, you can see so many business organizations, they fail as a result of this. So a lot of business organizations, like as I mentioned, the BlackBerry, the Nokia, and the Blockbuster, everything are reasons for the business failure because of not adapting to the system. Okay, so that is really, really important thing. You can see the lack of financial thing. So we talk about the lack of capital, lack of finance and everything. The third one I talk about the not competitive. The reason that we talk about here is not competitive enough. Not competitive. I think now you have an idea what is mean by not competitive. Some business fail because they are unable to compete effectively in the market, and there could be number of reasons why business eventually loses out in their rivals, right? New entrants, you can see. New entrants are there always in entering into the market. You can see at that time the Blockbuster was there, and that time Netflix was a new entrance at that time. As a result, the business was actually market share was taken by them, bring out superior products and read market conditions more effectively. Therefore, you have to do this thing. Computers should charge lower prices because their costs are low. We call this penetration pricing. You can actually outcompete those people by charging lower prices. These are the strategies to overcome the competition and use a destroyer pricing. Sometimes you can see China and everyone they are doing. They are reducing prices very low levels, and even though less than the cost even though drive out the competitors out of the market, so drive smaller rivals out of the market. This might happen when company dumps a cheap product in a foreign market. We call it dumping strategy. These things are there. So these are the main ways that some organizations, like a large organizations, are doing to small companies, and then as a result, if you are a small company, you cannot fight, you can challenge with those multinational companies, and then as a result, you have to fail. Ineffective cost control. Sometimes unnecessarily you are spending money for some things. Some cases business cannot keep their costs down. As a result of that, you can see organization they will fail a lot. As a result of that, organization will be taking so much of challenges these days, and as a result, new entrants, ineffective control and cost control, everything will be there. They may be small to exploit the economies of scale. Sometimes large rivals are there, but it's much more output to enjoy lower unit costs. So no cost controlling. Sometimes they're spending, no controlling of the cost and everything. That's another reason for business failure. Wasteful sometimes, and sometimes possible business paying too much of small money for some resources, not spending enough time to researching the supplies in the market, without giving for quotation, without taking them, scientifically analyzing, you're just buying them from everyone, right? So that's another reason failure. In some circumstances, business might not be minimizing the labor cost, and cost might also rise when they owing to external factors such as inflation, exchange rate, foreign exchange rate falls, and everything. Ineffective marketing, as I mentioned, the Thomas Cook failed. Ineffective marketing when when the world goes digital, they're still in analog days. They always used to have enough places the people can go and book their things, and also over the phone bookings are possible. But now everyone using the Airbnb and the bookings.com, some websites are there. You can manage your traveling and everything by yourself. And business might use inappropriate pricing strategies. Business might invest too heavily in the overpricing or inappropriate marketing campaigns. Business might use inappropriate marketing strategy like expensive television advertisements when social without using social media. These things are the main reason. And lack of business skills, another thing. Poor leadership is another thing. Sometimes you don't have the proper skill for organization to run, then that will be a problem for you to an organization. So you can see that organization will be really fast. You can do that thing. As a result of that, you can see this organization will be properly. This organization will be gonna fail one day, and the result of that, lack of business skills is a one reason that business gonna fail. Some business organizations, some leaders are there, their competitiveness and everything very low, and they fail because the owners are not sufficiently skilled. Right? Running business is challenging and require many skills and everything. Entrepreneurs have the be creative, good with numbers, motivational, and good decision makers and everything are there. So basically, you can see like poor leadership control. You can see the next one. The large businesses fail because they don't have a good leadership, a visionary leadership, right? And as a result of that, they change. You can see like some greatest thing, like a Richard Branson, a famous entrepreneur. He's a business magnate of Richard Branson, right? So for entrepreneurs and everything, you can see advice for entrepreneurs from Richard Branson. Just look at this.
But I think the most important thing about running a company is to remember all the time what a company is. A company is simply a group of people. And as a leader of people, you have to be a great listener. You have to be a great motivator. You have to be very good at praising and looking for the best in people. People are no different from flowers. If you water flowers, they flourish. If you praise people, they flourish. And that's a critical attribute of a leader. There is a very, very thin dividing line between success and failure. Most people who set up in business without financial backing, they fail at some times in their lives. I've only just stayed at the right side of that dividing line. For instance, just after we had a record company, I was fed up flying on other people's airlines. I felt that the experience of flying on other people's airlines was an unpleasant one. And I decided to set up an airline. Our bank went into complete panic attack. When I came back from doing the inaugural flight of Virgin Atlantic's very, very first flight from London to New York, I came back to find the bank manager sitting on my doorstep and informing me that they were going to close Virgin down on the Monday. This was the Friday, and that I had 2 days to effectively pay them off the monies that they'd loaned us. I remember pushing the bank manager out of my house, telling him he wasn't welcome, which is a dangerous thing to do to your bank manager, and then spending the weekend ringing around the world to all of the distributors of our music, asking if they could give us a temporary loan to get us through the following week, which they were good enough to do. And by the end of the week, we changed banks. We'd actually managed to find a bank that was willing to lend us 30 times the overdraft facility that our bank had lent us. And we managed to survive. And I think the moral of that story is actually don't think of your bank as somebody that you're beholden to. People just don't move from one bank to another. Sometimes you need to be willing to step up and move your banks in the same way that you step up and move your doctor on occasions. Anyway, I learned from that lesson. Virgin does work very well without me. I use myself to build the brand, to build the sort of 300 or 400 companies around the world. But I also learned the art of delegation. I have a fantastic team of people who run the Virgin companies, give them a lot of freedom to run the companies as if they were their own companies, give them the freedom to make mistakes. The Virgin brand is now maybe one of the top 20 brands in the world, well respected. When my balloon bursts, Virgin will continue to flourish. Maybe I have the icing on the cake on occasions. Maybe I have to spend a bit more money on marketing. But fortunately, Virgin is in a state where it can live on healthily without me.
Yeah. So you can see, guys, normally the Virgin Group and everything, this is Richard Branson story and everything. So the Richard Branson, I want to introduce you. Mainly the Richard Branson, the world's UK is like one of the richest person in the UK. Own more than 400 business line. The famous brand name is Virgin. The Virgin Airlines, Virgin record label, and the Virgin tours, Virgin Railway, to everything Virgin Galactic. Everything. So read his biography, find his biography. He's a great visionary leader. You can see we call a business magnet. It's Richard Branson, the person who taught there. You can see now he actually find out the financial difficulties were there at that time, and he was the company that delisted from the London Stock Exchange. He's the one, because the Virgin Airlines was there. Because the huge competition came from the British airline companies and everything. You can see that's why the Bank Atlantis was asking money and everything. At that time, they wanted to they asking their loans back, but asking short-term loans to finance this. Sometimes panic attacks are there for businessmen. There are failures are there. But the problem is normally if you're a real leader, good leader, you must be able to tolerate that risk and you must be able to have a very good visionary thing and you must have good mainly the mentality and everything must be maintained, the balance in mind and everything really important. So poor leadership is something, if you can't tolerate those risks, if you cannot actually find out the opportunities or risk cannot be calculated properly, then business will fail eventually. That's why the organization, like there are so many examples are there in the world. Good leaderships are there. You can see the Elon Musk in Tesla company, Bill Gates from the Microsoft and Mark Zuckerberg. So everyone actually have faced some challenges in their life once. But this leadership is the main target. Their leadership role is really prominent, especially the companies like Apple. The Steve Jobs role, you can't say, is unforgettable story. So this is really important thing, guys. For business failure, the leadership role, if fail, the entire business is going to be fail, because it's like a engine of a train. If engine stop, what happens? The business cannot run. Like Kingfisher Airline case study was there. So you can see the Kingfisher also one of the there's a huge debt was there at that time in US dollars. It collapsed in 2012 as a result of that. Right, this case study about that and how might poor management will affect this situation. Describe the external factor might affect the contribution of the downfall of Kingfisher. Right. Right, these are really good examples are there in these cases and everything we can find. I think so. Today's lesson, I want to talk to you about the failures and everything. Why business fails and what are the reasons for those things, right? So these are the main reasons we are normally focusing on today. The failure to innovation and everything. The last part you can see, as I mentioned, the Thomas Cook case again. That's their main reason was a failure to innovate and everything. Innovations are really important. If you fail to innovate, then organization eventually going to be they fail. Therefore, every organization they have their unique ways of operation, but leaders' role is really prominent. Financial management is really important. Human resource management is really important, and managing the organization, without doing over trading and taking decisions on time, innovation, facing competition, and taking the seasonal factors and then external factors very carefully into consideration is really, really important, right? So these are the main things that we talk about today. Again, we sum up the lesson. We talk about the cash flow problems which affect the business failures, and also we talk about the financial problems which affect the business failure. Not competitive, they're not competitive enough, and the failure to adapting changes in the market, like lack of innovation and everything we talk about, guys. So that's all about the lesson today. So we talk about the business failure reason and everything. Okay, so I think you get a very good understanding of the business failure. Okay.